Right, in this screencast we'll be looking at partnership. Alright, we'll be looking at definition, reasons for partnership, things that are contained in the partnership agreement, and what happens when there is no such agreement in existence. So let's begin. Alright, to begin, a partnership is a voluntary legal agreement between 2 and 20 persons for the purpose of running a business. Now there are exceptions. Banks cannot have more than 10 partners. There are other exceptions, but we will not look at them right now. Reasons for partnership. 1. To obtain or to access greater source of financial capital. 2. Family relationships. 3. To share the responsibilities. 4. The skills needed to manage or operate a business cannot be found in one person. Alright. The partnership deed or agreement. It deals with the amount of capital that is to be contributed by each partner, the interest on capital given to partner. 3. How profit or losses are to be shared. 4. The rate of interest charged on drawings by partners. 5. Salaries payable, if any, to partners. And 6. The rate of interest on loans given by partners to the business. When there is no partnership agreement, the following would be enforced. Profit and losses are to be shared equally. 5% interest is to be awarded to partners for loans given to the partnership. 3. No interest is allowed on capital. 4. No interest is to be charged on drawings. 5. No salary or remuneration is to be allowed. Financial statement used in partnership. 1. Trading and profit and loss account, also known as your income statement. 2. Your appropriation account, that deals with how the profit or the loss from the partnership is to be shared. And 3. The balance sheet, which, as we know, is also called your financial position statement. Now, your trading and profit and loss account remains the same. However, after calculating net profit or net loss, an appropriation account is made to show how the profit or the loss is to be shared. Alright, this is a layout of your appropriation account. Now your heading would be appropriation account for the year ended, and you put the date, or you may have profit and loss and appropriation account for the year ended with a date. Now you would start with your net profit or your net loss. Now to that you're going to add your interest on drawings. Now normally in every question you'd be given the amount of drawings that the partners would have had for the year, if any, or for a portion of the year, and you'd be given a rate in the question as to how much should be charged on partners drawing. So you're going to take that rate and you're going to do a multiplication. You're going to do a calculation. After you get the two figures, if there are two drawings, you add them together, carry across the total to the extreme right, and you would add that to your net profit. Then you're going to have your appropriations. Now this heading here is optional. Alright, if you're going to write less appropriation, there is no need to put less interest on capital, less salary, less bonus. You can just put interest on capital, salaries, and bonus if they are applicable to the question. Also, you must note that it is interest that is being represented here and not the full capital figure. So it is your task to peruse the question, look for the interest on capital, usually a percentage is given, and you're going to multiply that by the partner's capital contribution. Alright, you're going to insert the figures, then you're going to locate or identify the salaries, if any. Now pay attention to the salary that is given, how long it is for. Alright, sometimes you may be given a salary for 1 month and you're doing a financial statement for a year, in that case you'd have to multiply it by 12. Alright, if it's for half a year, just the same, and you're given an annual salary, you divide by 2 or you multiply by 6 over 12. Alright, sometimes you may have a bonus. Alright, and you're going to insert the bonus for the partners, and after you insert all these figures, you sum together the interest on capital, get one total, sum together the salaries, get one total, sum together the bonuses if you have bonus, get one total, then you add all three together, and that figure that you get, you're going to subtract it now or deduct it from that figure above that represents your adjusted net profit. Alright, because remember the heading says less appropriation. Now that will take you to a point where you have profits that are now available for sharing. Now the profit will be shared between or amongst the partners. If there are two partners, between more than two amongst the partners. And to share the profit, you would need to know what method is being implemented. Alright, whether they are sharing the profit equally, whether they are sharing the profit in a particular ratio, whether they're sharing in proportion to capital, or whether a simple percentage is being applied. Whatever means that is used, when you add the different parts of the share together, you should get back the original amount of money that would have been shared. Alright, let's look at two examples that deals with calculating interest on drawings. Now in example 1 and example 2, we're assuming that the financial year is from 1st January to 31st December. Alright, somewhere in the question you're told 5% interest is charged on partners' drawings. Now the scenario is as follows. Drawings for partner A during the year was 13,200. Now the calculation of partner A's interest on drawings is as follows. You take the drawings, you multiply it by the rate, and you divide by 100. Alright. $13,200 times 5 over 100. That gives us a total of 660. Alright. Notice we were simply told drawings during the year. Now in scenario 2, we're given a little more detail. Alright. The same 5% interest is being charged on drawings, but now here we're told drawings for partner A on September 1st was 13,200. Now the calculation of partner A's interest on drawings would now be as follows. Drawings times the rate divided by 100 multiplied by the months left over 12. When I say the months left, now because it's the 1st of September and the year ends in December, we will check the whole of September, that's 1 month, then October, that's another month, then November and December, that would be 4 months out of the full 12 months in the year. So we would multiply by 4 over 12, and instead of getting 660 as in the first example, we'd now end up with 220. Alright, so we just multiply by 4 over 12. Alright, let's look quickly at how profit or losses may be shared in a partnership. Now there are a number of ways that the profit or loss may be shared, okay? As we have established previously, if there's a partnership agreement, it would spell that out. Now if there is no agreement, we know definitely profit or losses will be shared equally. Now, if there is an agreement, it can be shared equally also. Likewise, it can be shared in proportion to the capital or in a given ratio or using a particular set of percentages. Alright. Now, equally simply means that the total profit after appropriation is divided by the number of partners, with each receiving the same amount of shares or equal profit. Okay. In proportion to capital. What this simply means is that all the capital of the partner is added together Alright, each partner receive his capital divided by the total capital multiplied by the profit to be shared. Example, let's assume that we have partner's capital, partner A, partner B, partner C, 3,500, 2,500, 4,500, and the profit to be shared, 12,000. Now we would add the three figures together, 3500 plus 2500 plus 4500. That gives us a total of 10,500. The profit to be shared, as we can see, 12,000. A's share of the profit would be the profit to be shared multiplied by A's capital divided by the total. B's share would be calculated in a similar manner. Profit to be shared multiplied by B's capital divided by the total capital. And C's share would be calculated in like manner. Profit to be shared times C's capital divided by the total. Alright, in all cases, you'd realize when the figures are added back together, you should get the original amount of profit that would have been shared. Alright, let's just verify that. So we have 12,000 times 3500 divided by 10,500. That gives us 4,000. 12,000 times 2500 divided by 10,500. That gives us 2857.14. And then you have 12,000 times 4500 divided by 10,500. Alright, and that will also give us $5,142.86. So let's add the figures back together now. 5142.86 plus 2857.14 plus, I think the first figure would have been 4,000, and we get back our 12,000. Alright, let's continue. Profit can also be shared in a given ratio. Alright, the part of the ratio represents each partner's share. This is divided by the sum of the ratio parts and multiplied by the amount of profit available for sharing. Example, A, B, and C are in partnership sharing profits in the ratio 2, 3, and 4 respectively. That means that the 2 correspond to A, the 3 correspond to B, and the 4 correspond to C. Total profit available for sharing is $14,000. Calculate each partner's share. Alright, if we add the three numbers together, 2 plus 3 would be 5, plus 4, that would be 9. Okay, so A would receive 2 nines times the profit. B would receive 3 nines times the profit. And C would receive 4 nines times the profit. As we can see, these are fractions. You add together would give you a whole. Definitely would mean that if we do the calculation and we add the answers back together, we would get back the original amount of profit that would have been shared. Alright, let us look at the partner's current account. Now, normally, in addition to a capital account, partners would keep a current account wherein they would record all of the things that would be placed in the appropriation account in addition to the current account, existing balance, and the drawings. Alright, now a current account would normally have a credit balance. Okay, so normally in the balance sheet which is your financial position statement, when you get to the equity section, it would be different from that of a sole trader, where we would usually have finance by capital plus net profit minus drawings. We would now have capital account, and you'd list the partner's capital account balance, and then you're going to have current account. But here you would not simply use the current account figures given in the question if they're given, but you would have to adjust these figures based on what would have taken place or transpired in the appropriation account. All right. Now your current account can be prepared as a regular T account or as a column. Now the credit side, if you're preparing it as a column, you would list the items that you would normally put on the credit side of the T account. You list it first. Now you would start with the opening credit balance, which you may prefer to write balance brought down, followed by interest on capital, partner's salary, share of profit, and if there is interest on loan to that particular partner. Now note that this is just for one partner. So if there are two partners, you'd have to do two columnar current account, or you add an additional column here where you can show the figures for that partner. All right, so you'd add these figures together, you get a total. Next, you are going to list all the items that you would typically put on the debit side of the current account if you're doing it in the T account format. That would include an opening debit balance, if there is one. Now, if a partner has an opening credit balance, he would not have an opening debit balance as well. As a matter of fact, the question would specify what balance the person has. Normally, if they just give you current account balance, nothing else, no bracket, anything, it means it's a credit balance. If there's a debit balance, the letters DR would come after the figure, or the figure itself would be enclosed in a bracket, denoting that it's a negative or a debit balance. After the opening balance, if there is one, you're going to locate the drawings figure in the question, and also the interest on drawings from the appropriation account. In addition to that, you must note that if there is a share of loss for that partner, you would have to record it on the debit side. All right. Now notice you have share of profit. If it's a share of profit, it would go on the credit side, which would correspond to the top part of the current account. And if it's a share of loss, it would go on the debit side, which corresponds to the lower or the bottom part of the current account. So from that total for all of the credit items, or the top part, you are subtracting all of the items that would be on the debit side, and you get an answer. All right, a final figure that should represent your closing credit balance, because here we can see I don't have a bracket enclosing it. Now, if at the end you end up with a negative figure, that means that your current account has a debit balance. All right, in this case, it means that you have overdrawn profit or drawings in excess of profit. Because if we reason this out here, the items up here typically represent salaries and anything that the partner is entitled to. The debit side, or the lower portion, would basically tell you all the items that the partner would have withdrawn and all the costs they would have incurred in withdrawing monies and so on. All right. Now I have here in the above column the current account brackets means negative. Okay. Now here is a look at that same current account if it's prepared as a T account. On the credit side, your opening credit balance, your interest on capital from the appropriation account, partner salary if there is any, also from the appropriation account, the share of profit from the appropriation account, and if there is an interest on loan which should have been in the appropriation account as well, then you'd find that there. On the debit side, you would have the opening debit balance. Again, you would either have a credit balance or a debit. You would have the drawings, you'd have the interest on drawings, and the share of loss. Again, you'd have a share of loss or a share of profit. Now, instead of doing individual or separate tier accounts for the partners, you can decide to have one current account, one tier account with multiple columns dealing with specific partners' balances. All right. So all you do, you add additional columns for the partners. If there are 3 partners, you would have 3 columns, 3 money columns on each side. If there are 2 partners, as in this case, A and B, and you list whatever items correspond to these partners. All right. Now, at the end of preparing the current account, it is expected that the credit side would be bigger than the debit, meaning that you would have the balance carried down falling on the debit side. All right. Once the carry down comes on the debit side, it means that the brought down when the next month starts would come back on the credit side. And that would simply mean that the current account has a correct balance. All right. Or you have undrawn profits. If the credit side is smaller than the debit side, then you would have a balance carried down on the credit side. And that would mean that the balance brought down would come back on the debit side, which means that the current account balance would be a debit balance, and that debit balance would have to be subtracted or deducted from the capital totals to get your final figure, which is usually your capital employed. All right. Note, at the end, the current account must be balanced off, and the balance is transferred to the finance by section of the balance sheet. Upon balancing off, a credit closing balance is added to capital, whereas a debit closing balance is subtracted from capital. All right. Changes to the balance sheet. The top part, that is the part with all the assets and the liabilities. That's when you do in the vertical format, the vertical style. It remains unchanged. The finance by section or the equity section, this is what it would look like. Capital account, the name of the partners, the capital account balances, you total it, you get one figure. Current account, you list the partners, and you put the balances that you get at the end of preparing the current account, not the one that is usually given in the question. Okay? Then you add the figures together, you total with the capital, and you get the answer. This answer here should usually correspond to the same answer at the top of your balance sheet. Now, another way of looking at it, if you're doing it in a columnar fashion, capital account, partner A, partner B, you add together, one total, and you list the items corresponding to the different partner. You deal with one person at a time. You get a closing balance. You deal with the other person, you get a closing balance. You add the 2 closing balances together, you get one figure, which you would add with the capital account balance, and then you put a total underneath. Now, if one answer is positive and one negative, when you add them together, it is expected that your answer would get smaller. In fact, if the negative answer or balance is bigger, it means that the overall balance on the current accounts would be negative. In this case, when you have a negative answer down here and you add it to a positive, you'd expect that your overall answer to become smaller. So keep that in mind. Thank you.